Good afternoon, everyone. Thank you for coming today to the Oversight Ad Hoc Committee meeting. And I'm going to call us to order and ask Gary to please lead our invocation.
Yes, ma'am, Madam Chairman. Dear Heavenly Father, we thank you for this day. We thank you for this opportunity to be here. Lord, we thank you for the opportunity to, in what we do, glorifies you. And Lord, we just ask for your blessings be upon us as we go through this day and this evening as we return back to our homes. Amen.
Thank you, Gary. So I would like to present the approval of minutes. If we could have a motion to approve those minutes.
Motion to approve the minutes.
All in favor?
Aye.
Aye.
Aye. Okay. And next, I would like to ask Joe if you would like to get up and introduce Malden and Jenkins LLC and give us a little background and history to get us started. I'd appreciate that.
Absolutely. I'll just do it from here if that's okay.
Absolutely.
Mr. Grant Davis, he is a partner with Malden Davis CPA Advisors. They have performed our audit for a number of years now. It's the financial audit that is done every year. We're required to by both state, federal, bond, grant, many other laws and regulations. And this gives a good overview of the county's finances. It covers all the funds that we deal with and compares what we're doing to budget and identifies any issues that we may or may not have in our accounting program. We also have Angela Roach here. She is our finance director. I don't know if you all had an opportunity to meet Angela, but she's the one that actually deals with the outside independent auditors and gets with them and provides them the information and all that. So with that, Grant, why don't you get up here and tell us about our audit results.
Okay. Well, thank you all for having me to come present the results of the county's fiscal year 2024 audit, that being the fiscal year ended June 30th. Before I start with the PowerPoint, I just want to mention we've ultimately issued two documents in conjunction with the audit. One is the one with the pretty picture on the front, which is the annual comprehensive financial report, and that includes our opinion on the financial statements. And I'll go through this a little bit, but there's ultimately three of our reports in this document. The other is a document we call our auditor's discussion and analysis document. It's about 25 pages long. I don't know, it looks like this if you've seen this in the past. And the purpose of this document is to communicate to you all as the governing authority of this county things that we are required by our professional standards to communicate. And I'll go through some of those. Some of those will be in this PowerPoint that I have. Others are included in here. I'll certainly mention everything that I think is relevant, but again, everything we're required to communicate is memorialized in this auditor's discussion and analysis document. But beyond that, beyond those required communications, we've included a few other items in this auditor's discussion analysis document. I'm going to call it the AD&A from now on, so I don't keep getting tripped up saying auditor's discussion analysis over and over again. But it tells you a little bit about who we are as a firm, our practice as a whole, our governmental practice specifically. There's some financial analysis of the county as a whole, and this is at a very high level, really probably less analysis and more highlights of, here's your assets were this, your liabilities were this, here's a chart of general fund revenues, so forth and so on. And then toward the end of the document, we talk about new accounting standards. The GASB, the Governmental Accounting Standards Board, is the authoritative body for setting GAAP for governments. And they have been active over the last 15 years, and they're going to continue to be active. And what we've tried to do is just provide a brief synopsis of a new accounting standards when they're required to be implemented. So that's basically beyond just the things that we're required to communicate. We want to communicate all of those things to you all, and we do this on an annual basis. Now, as I mentioned a moment ago in this PowerPoint that I've prepared, this is just, you'll see this in our auditor's discussion analysis document. This is just a little information about our firm. I don't intend to read this to you other than to say governmental auditing is all I do on an annual basis, for better or for worse. and it's a huge part of what our firm does. It's about 40% of our firm in terms of hours and revenues. So you can see there are 156,000 hours of service annually to about 725 governments across the country at this point now. But as we look at the reports that we have ultimately issued, and I'll just refer to a couple page numbers as I'm going in the event that you did have the annual comprehensive financial report in front of you and you want to see some of these things. But the first is our independent auditor's report. It's on page number 1, which is a little bit misleading because it's really not the first page in the document. It's after the introductory section, but it's the first page with a page number, not a Roman numeral on it. And as you read that, you'll see ultimately front and center, second paragraph, that we've issued an opinion on the county's financial statements, and that's an unmodified opinion. That's really not glamorous language, but in my view, it's really the only acceptable result in a financial statement audit. You get to have problems with greater governing bodies, whether it be the state government, the federal government, bondholders, things of that nature, when you have something other than an unmodified opinion. So we've ultimately issued a clean opinion on the county's financial statements for its year ended June 30, 2024. This opinion goes on for about 4 pages. It talks about our responsibility as auditors, the county's responsibility for the financial statements, and I always like to note this document, this annual comprehensive financial report, is not our document, it's the county's. This is the county's information, the county's document here. It also mentions that we are required to plan and perform our audit in accordance with generally accepted auditing standards and government auditing standards. Those are the 2 acronyms you may see on the slide there, GAS and GAS, or GAAS, however you want to think about that, GAAS and GAS. Those are what those acronyms are representative of. And in conjunction specifically with the government auditing standards, the GAS requirement, we've issued a second report. And I mentioned at the very beginning there are 3 ultimate reports in this document. The second 2, or the second and third one, I guess I should say, is at the very back of the document. So again, if you happen to be following along, page 159 is this report on internal controls and compliance with laws, regulations, grant agreements, so forth. This second of 3 reports is not designed to offer an opinion, but to provide what we call negative assurance, which is to say that as a part of conducting our audit in accordance with government auditing standards, if we identify any instances of noncompliance, which that noncompliance could be in the form of certainly laws, regulations, grant agreements, bond compliance, any noncompliance relative to those, we're required to report that to you all. Similarly, if we identify any deficiencies in internal controls, and those deficiencies, the two terms for a deficiency in our world is either a material weakness or a significant deficiency. It really just depends on the weight of the matter there in our view. We're also required to report those to you all, and I'll kind of mention the results here as we move through. We did not identify any internal control deficiencies as a part of our audit. We did identify one instance of noncompliance with state law. We've issued what we call a finding relative to that. It's state law, and I'll just give you the brief synopsis. The verbiage of the finding itself is on page 168 of the annual comprehensive financial report, but basically state law requires that public deposits, so deposits that are with a governmental body, be collateralized to the extent they exceed FDIC insurance. And of course, FDIC insurance is typically $250,000 at a financial institution. Banks or financial institutions are required to collateralize those deposits. Basically, they purchase investments to pledge against, in this case, the county's deposits. In the event there were a bank failure, that those assets would then be available to satisfy the cash that was lost. It's really what the state law is requiring. And there were 2 entities within the county, one being the clerk of court, one being the public defender's office, who have deposits that are outside the purview of the county treasurer, that those balances were not appropriately collateralized. And it's really the bank's problem to do that and keep up with it. But I will say the reason that it's reported in the county's financial statements as a finding is because the county is ultimately responsible for the protection of its balances. And generally the way that this is that manifests compliance with this is these officials who are in charge of these balances just check in monthly with the bank say, will you provide me what we call a pledge report that says, all right, here's the value of your deposits, here's the value of the assets that we have pledged in excess of FDIC insurance, showing compliance there. So that's really the extent of the one noncompliance issue. But otherwise, we did not note any instances of noncompliance relative to our audit. The third and final report, and I know I'm bouncing around here, but if you're following along on the PowerPoint, it's the last bullet there, is what we call a single audit report. So anytime you expend in excess of $750,000 in federal money, it triggers a federal compliance audit. Each federal program has its own compliance requirements that are dictated by the federal OMB on an annual basis. And we're required this past year to audit only one of the programs of the county. It's based on a total percentage, and there are dollar thresholds. I won't get into how we determine what is a program to audit and what's not, unless you're interested in that. But the county spent about $13.7 million in federal monies in fiscal year '24. $8.4 million of that, or about 62%, was what you're probably familiar with as ARPA, the Coronavirus State and Local Fiscal Recovery Funds program. We audited that program and have issued an opinion on compliance, which is on page 161 of the annual comprehensive financial report. That's also a clean opinion. It's not like the second one where we don't offer an opinion but negative assurance. This one offers an opinion, and it's unmodified, and it's stating that, in our opinion, the county complied with all the direct and material compliance requirements as stipulated by the federal government, in this case OMB and the United States Treasury, relative to that program for this fiscal year. So another clean report issued here with no findings or other matters to note specific to that. And that's what this slide just mentions, the program itself and the total dollar amount that I just mentioned. Now, within the financial statements, and this is part of the required communications section of that auditor's discussion analysis, I promise I'm not going to read all this to you. You can read all this yourself, but there are some things that I always like to cover. The county has accounting policies for basically everything in its financial statements, and we evaluate those policies as a part of our audit. The financial statements also include judgments and estimates, and those estimates cover a variety of things ultimately. The useful life of a capital asset, the discount rate that's used to measure the net pension liability, the collectability of receivables. I mean, these are just a few examples. And ultimately, we evaluate the qualitative and the quantitative aspects of these, what we call inputs and outputs, that are used to ultimately measure and arrive at these estimates as a part of our audit. And we ultimately agreed with the county's estimates in conducting, or as a part of conducting our audit. The footnote disclosures, I assume you all have probably looked at this document to this point, the footnotes just seem to go on and on and on and on. However, they are comparable to prior years, which is a requirement. To the extent that GAAP doesn't change, comparability and consistency is something that we want to see from year to year. Certainly the dates have changed, the numbers have changed throughout the document, but you'll see great consistency from year to year unless it is otherwise dictated by change in GAAP. We had full cooperation from management in conducting the audit. We didn't encounter any significant difficulties, which I think is obviously very important in conducting the audit. We didn't, again, have any disagreements about anything. I will say that I can't give you the exact number, but I believe Greenville County this past year was one of the first counties to have its audit completed and issued to the state, which I think is something that you all should be proud of. Certainly one of the first, if not the first. So I think that, again, that's something that you all should be proud of to get folks in and out. You can look on the state treasurer's website and see all the county audits that continue to be delinquent, meaning they still have not been completed. And, of course, that's not a very good place to be. Audit adjustments. We did not identify any items that needed to be adjusted and then pass on doing that from a materiality perspective, which is to say we didn't identify something that was wrong and say, well, just because it's below this dollar amount, we're not going to have anybody adjust it. So we had no past adjustments. And ultimately, we received representations from management relative to the accuracy and completeness of the information that we were provided in order to conduct the county's audit. I won't read all of this to you again. I think the big thing to mention here is auditor independence. We're independent with respect to the county, which is required in an external audit. We can't do an audit if we're not independent. So I always like to mention that as a part of these. This is just some financial highlights, and this is from probably 100,000 feet, but just, some key takeaways at just what happened during the fiscal year. And of course, you can read these just as well as I can say them, but total assets a little bit over $1 billion, and I just like to highlight these too. These are not intended to be representative of all of the county's assets, but those that are typically of interest. Capital assets, simply because it's the largest number. That's all your buildings, infrastructure, vehicles, all those things reported net of accumulated depreciation. And then, of course, cash and investments there at $195 million. And then liabilities, nearly $800 million. I broke these down into kind of big buckets. Debt is, you can see what I've listed there. Those are in the form of bonds. Those are a variety of different types of bonds, but bonds in general. Notes payable, leases, and so forth make up about 281. Pension is the largest individual line item in terms of liabilities, huge liability. Changes on an annual basis that's completely outside of the control of Greenville County. OPEB is other post-employment benefits. That's in the form of health insurance provided to retirees. So all that number is trying to quantify is what have we promised to pay for retirees' health insurance. And then the net position is just equity. That's $359 million. That's an increase of nearly $40 million from 23 to 24. And of course, you can see the same concept here. Revenues, $485 million. These are all funds, all activities. I should mention that. It's not just one fund, all funds, all activities. Total expenses, $447 million. Again, you can see this change in net position or increase in equity of $39 million. This is the general fund. This is usually what everybody's interested in. Same kind of concept. I'll speak a little bit to fund balance. Fund balance decreased by about $2 million from 23 to 24. However, you can see that I've broken it down. Fund balance amounted to about $81 million, and 76% of that, or excuse me, $76 million of that are by far the largest component of fund balance is unassigned, which is basically available for appropriation. The general fund, if you take the general fund's expenditures here of $236 million and just divide that by 12 months, general fund spent $19.7 million a month. If you apply that to that fund balance figure of $81 million, that gives you about 4 months of fund balance on hand at June 30th. So if you didn't take in another dollar, you could operate at the same level as you did in 24 for 4 months, is what I'm trying to communicate here. And I mean, you may not have this question. I often get asked, what is the right amount of fund balance? My personal view from experience is somewhere between 4 and 6 months is a really healthy place to be. I think about all the places that were impacted by the hurricane back in September. I know Greenville was as well. FEMA has always been notoriously slow about reimbursing entities to have to pay for disaster recovery, to have to float significant expenses. Is just one example, I think, of why it's important to have a cushion of 4 to 6 months to pay for unexpected things. Of course, eventually you'll get reimbursed, but somebody's got to front that money at least at the beginning. So anyway, just my little anecdote on fund balance there. This is just the income statement for the general fund, and again, I won't read this to you. We just talked about it. Ultimately, the fund balance, the general fund decreased about $2 million from 23 to 24. This is just your revenues in pie chart form. The big red slice is property taxes, which is pretty typical. I doubt that's surprising to anybody. Same concept here, expenses. If you're having trouble following the colors, the $3.5 million at the very top of the chart is administrative services, and it goes around clockwise from there if you're following down. So the big slices here are law enforcement and the, whatever you want to call that, maybe Garnet. Maybe we call it Garnet since we're not too close to Clemson right now. But $74 million is law enforcement services. $39 million, the yellow slice, is public safety, which is, for the most part, that's your fire and things of that nature, not law enforcement. So, again, none of that is atypical in terms of the way that that's slicing up, in my view, from counties across the state. This is just a few other things. I mentioned that there are some new accounting standards coming up. I typically like to highlight these. These are usually a challenge for the finance department to have to continue to adhere to. This new 101 is related to compensated absences. I know you all probably don't care all about the details of what they're going to have to do, but just to mention that it is a continuing challenge to keep up with the pace of the GASB. And they are certainly continuing to develop more projects to discuss. I just mentioned this just in the event, we offer free continuing education to our clients. I know the county personnel have participated in these. In the event that you ever want to spend a day virtually with us learning about governmental accounting, we'd love to have you. So we try to make it as fun as possible. And we do have elected officials that participate in these from time to time, depending on the topic. And the last thing I'll just mention here is we do offer a comprehensive governmental advisory service offering in terms of operational assessments, forensics, all of those types of things. And of course, this is mentioned in auditor's discussion analysis as well. But in addition to our auditing services, we do additional things specific to governments as well. So anyway, I'd be happy to answer any questions that you have if you may have any.
Yes, can you tell me, Grant, thank you, by the way, for your presentation and your time. This is just a basic audit, right? A statement of financial condition. Was there any extra things you looked at outside the norm of a financial condition, or?
So the only thing that would be, well, it's normal to Greenville County. It's not normal to everybody, is the single audit. That's not always required everywhere. That's that federal compliance audit. Sometimes you have it. Greenville County basically always has it because you spend a lot of federal money ultimately, which is not, I don't say that in a bad way. The larger governments typically do have those, and those are special. Those are separate. They're their own thing. But beyond that, the financial statement audit, this external audit is a financial statement audit, and our role and responsibility is to determine whether the records that the county prepares and maintains throughout the year are free of material misstatement. So what we're looking for is, are we stating the financial statements correctly? And that is the extent of the audit. And of course, that does include, again, that purview of the government auditing standards, the non-compliance, the internal controls. That's typical also in a governmental audit. That's not specific to Greenville County or anything in addition to what is required by state law.
Thank you.
Thank you. That was it. Appreciate that report. Just for the record, it looks like Mr. McGahee, Councilmember McGahee, is on with us. Did we want to reflect that in the minutes that he is participating?
I'm here, yes, sir.
Okay, thank you.
I'm in Alabama for work. Sorry.
That's no problem. Okay, it looked like 82 million in grants was what was reflected in the report. Is this report able to tell us at all how we do compared maybe to other counties or a standard about our ability to get grants or to, in other words, achieve grants? Is this report able to tell us that?
No, sir. The report is not designed to evaluate the grant award process or to even evaluate you against maybe a peer government within the state or otherwise. I think ultimately that may be something that's worthwhile, is to look at the grants function to basically see, are we getting the grants that we could be getting, right? But that's not within the purview of a financial statement audit.
And that is a report that this committee, if it was interested in it, we could get that from your company, or that's a report that's common, or?
I think it is, so to answer your first question, yes, we could. We have to observe our independence, and in fact, our governmental advisory group is a completely separate arm from the audit side. We don't want to have any home cooking, so to speak. And of course, I have to remain independent to serve the county. But we do look at that. In fact, I was at a city council meeting in South Carolina just last week, where that was one of the things that we were looking at or being evaluated to approach, is, do we have a grants strategy document that basically lays out, here are our priorities for receiving and ultimately being awarded grants. Something I think it'd be very helpful to do ultimately, but again, not something that's within this report.
You mentioned the fund balance. The range would be, a good range would be 4 to 6 months. on fund balance. The picture, is this a snapshot picture of our balance, or is that an average? Because doesn't ours around tax, when we put the bills out, we get a big balance, or how's it?
You make a great point, and you'll see, I mean, if you look at that revenue pie chart, just in and of itself, that large slice of the pie being property taxes, those are paid at the basically the beginning of the year. So what I always like to say is, you think about it like this: you're a June year in, you've gotten your property taxes, you've gotten basically what you're going to get for your property taxes already. You've made it around to June. What you got to do is get back around to property tax time, So June's a pretty lean time of year from a cash flow perspective. That's not to say that, your expenses are pretty normal throughout the year. Your personnel costs are typical. I mean, if you throw out capital type things, your expenses are primarily heavily weighted towards personnel. And of course, that's not specific to here. That's just any government. Personnel is going to be your largest expense, generally speaking, if you take out capital items. Those are pretty standard, 12 months out of the year. You're not getting a lot of variation in your cash flow on the expense side, but on the revenue side, you've got these kind of huge mountains in terms of cash flows and when things are coming in. So to be at June, the reason I think, again, 4 to 6 months is healthy is because you're trying to get back around to property taxes again. And so, 4 months probably being on the low end of that, obviously, to get you back around to January is where you're trying to be. But again, that's my personal recommendation has always been 4 to 6. If you look outside of, me, if you go, if you Google a recommendation, you get a variety of things. And the reason that is every government has different ideas, different plans, different initiatives, different focuses on things. So it's hard to compare. It's hard to say, all right, Greenville County, I want to compare you to Richland County, or I want to compare you to Horry County, because you've even got different programs within your government as to how monies are coming in and how they're required to be spent. So I think that would probably be something to evaluate specific to Greenville County, with the baseline of saying we want to be 4 to 6. Something like that.
Well, keep in mind, we also have a council-approved financial policy that requires us to keep between 25% and 35% of revenue. So thank goodness the 4 to 6 months kind of falls within that 25 to 35. But that's what we've always looked toward, to keep that kind of fund balance.
Yeah. All right. I did have another question about, since this, I guess this is a statutorily mandated audit. If it's a statute, are you aware of any criticisms of what it does? Maybe the statute should be updated or include things that this does not include, or does that make sense?
It does. So each state, I have operated in Georgia, North Carolina, and South Carolina in terms of my governmental accounting and auditing experience. And each state has a little bit different oversight of the local governments. I think probably North Carolina on the heavy end of that. They're pretty involved. Georgia probably a little bit less so, and then South Carolina probably at the very, very, very bottom of those three in terms of statewide oversight. And of course, from a county perspective, I mean, I think the argument has always been we really like home rule. We don't want the state telling us what we've got to do and all these different different attributes to be tested or things like that. But if you look across the country, there are state requirements in terms of a variety of things that auditors look at and report on within this document. The state is pretty bare bones. The only thing that, to my knowledge, that the state of South Carolina is really interested in is the schedule. It's kind of a goofy little schedule in the back. It's the schedule of court fines, assessments, and surcharges. Basically, how much did the clerk of court and the municipal court take in, and how much did they remit to the state treasurer's office. If your audit doesn't have that in there, then they throw it out. As long as that's in there, they're happy to have it. I hope I don't get in trouble. I'll probably be quoted for saying that. But
Right.
Beyond that, there's no oversight at the state level in terms of having the state auditor review reports that are submitted by outside CPA firms. That's not the case in both Georgia and South Carolina. The Department of Audits looks at these reports, provides feedback on them to make sure they're acceptable and meet all state requirements. So, I really couldn't speak on whether there should be changes, or I probably shouldn't, maybe, shouldn't speak if there should be changes. I can say, though, that in comparison with the states that touch South Carolina, even Tennessee, I think South Carolina requires probably the least from a state statute perspective.
Thank you very much. Kurt? You want to see if Kurt has any?
Yeah. Kurt, can you hear me?
I can hear you guys. Yes.
Okay, you have any questions?
Not really. I mean, it'd be more in the weeds stuff that is not really necessary right here. I'll ask it separately.
Okay. You have anything, Frank? No? I do have one more question, just as an example. I just opened my book here. I'm on page 18, if you want to look what I'm looking at. Statement of activities. I'm just going to pick one of these. It doesn't really matter which one it is. Let's just say judicial services, 36,265,000 and some change there, expenses. So when you look at those things, I'm assuming you come and you look at those particular expenditures. What's the process of determining what goes under that?
So it's generally department-based, so certain departments. And I mean, really, if you look at, first, this statement of activities, not specifically Greenwood County, but the statement of activities for a government anyway is a bizarre statement to try to look at. You're looking basically from the left to the right and then top to bottom to figure out what all it's doing. But
Right.
the expenses in the column you're looking at are right. The only thing that I'll note is, I'm trying to explain this without getting too nerdy on the accounting side, but you'll notice that this column is called expenses. If you flip over to page 22, you'll see that instead of being called expenses, they're called expenditures. And that
Expenditures.
probably doesn't matter to y'all, but it matters in our world. And so on page 22, the basis of accounting is called modified accrual. You'll see that the general fund has no capital assets in it. It has no debt recorded in it. There's no liability for any of that, and that's that modified accrual basis. On the statement of activities, you're on a full accrual basis. So these expense line items, or these expenses that, like you noted, the $36.2 million for judicial services, that includes depreciation expense on the assets that those have. It's not cash, spending. You've
Right.
got the change in the pension liability associated with that, the change in the OPEB liability. You've got all these accruals that aren't in the expenditure side. And in fact, you'll see that we even have to present a reconciliation within this document. The reconciliation is on page 23. So what it's doing is saying, all right, here's your change in fund balance at the top. Here's all the things we had to adjust to take it from modified accrual to full accrual to get to this statement of activities that you noted. But within expenses, so our audit is what we call a risk-based audit. So we're looking at things that in our judgment carry risk to the financial statements. Again, our job is to make sure the financial statements aren't materially misstated. So typically what those types of expenses look like in terms of our specific testing and analysis are personnel costs, capital spending, repairs and maintenance spending, certainly depreciation expense. I'm trying to think what else we may specifically look at in terms of the details of that. Anything that's what we consider to be significant and unusual, typically that's due to some large fluctuation from year to year. If you had, some line item that was called contracts that was $100,000 last year and now it's $2 million, then we're going to look at that and dig in and try to figure out what has caused that. But that's generally the nature of our testing on expenses. And ultimately, a lot of the risk in a financial statement audit is not in your income statement, it's in your balance sheet. It's where, is our cash properly stated? Have we shown our receivables the way we should have? Are we trying to under-report liabilities or over-report assets, things of that nature? So the balance sheet gets a lot of work. I'll be completely honest with you on that. The revenues take a lot of testing. Property taxes are tested very specifically. Sales taxes tested very specifically. Different charges for services. And then expenses, those big buckets. Like I said, personnel costs. That's your major expense across all categories, no matter what. Are getting certainly a lot of look. But from a purely compliance standpoint, if y'all spent $200,000 on some contract, is it likely that we looked at it and said this is not what council intended? No, that's probably not what we did.
Okay, so this 13 million at the bottom, basically it accounts for all these differences that are not accounted for in the other expenses. Correct?
Well, so yeah, it's picking up everything that is left. It's taking what was on the income statement on 22 and adding in everything else that we're required to take it from modified accrual to full accrual. So
Okay.
full accrual would be like your normal business. If you were going to look at, I mean, I know this is a little bit bizarre because businesses don't have property taxes and things of that nature, but full accrual is like a business financial statement. Includes all assets, all liabilities, all revenues, all expenses. The governmental funds balance sheet and income statement leaves off long-term assets, which are typically capital assets, and long-term liabilities, which are like, you know, your debt, pension, all that stuff is left off of those statements. And the reason the GASB does that is they think that it's easier or it's more helpful for governments to make decisions based on something closer to a cash basis. How are we spending money? That's what we're trying to make decisions on. How much money do we have? How much did we spend? How much are we going to spend next year? And that's why there's this different basis of accounting between statements within these. But again, this is all GAAP. We're not doing anything that we're not supposed to do. All counties are like this
Okay.
from a reporting perspective.
All right. Any more questions, anybody? Good? All right. Well, thank you for coming, Grant, and spending this time with us. We appreciate that.
Thank you for having me.
At this time, we're at the public comments section. How many speakers do we have?
We have one speaker.
Okay, great.
It's Michelle Schumann.
My name is Michelle Schumann. I live at 22 Mayfair Lane. Thank you for this opportunity. Wow, that was interesting. But from a taxpayer perspective, that audit has got to come down where we live. You're asking us for millage increases. You're asking us for more money. And yet I've heard over and over, well, it's government accounting. It's government math. Well, 2 + 2 = 4, no matter how you cut it. And I went online and I looked for government accounting. And Wall Street Journal has a blog, and it's very clear. There's nothing special about government accounting. When I did a readability search on this test, on this document, it comes out as a professional level. And you're asking the general public to understand a document that is written way above most people's understanding. I have post-college degrees, and I have experience in bookkeeping, and it's hard. And when I have to do Control F to find COVID and just try to match the numbers, and it's next to impossible to match the numbers and make sense out of them, then you want me to pay you more money? You're asking me to believe that you're not hiding something? And then in the last budget sessions, we had the crane story come back up. Made it look like we're padding the budget just so we have extra money to move around. That's why we, the taxpayers, are frustrated with this whole process. The budget's got to come down where we understand it. The audit absolutely must come down where we can understand it. We must know where we're spending our money and what we're spending it on. And we must have our questions answered before we keep spending more and more money. Thank you.
Thank you, Ms. Schumann. That's all. We're ready to adjourn. Make a motion. Adjourn? Yes. All in favor? Aye. Thank you.
All right.